Hey tech aficionados, welcome to the Wednesday edition of Tech Stocks Daily. Buckle up because today's episode is jam-packed with sizzling market moves. We've got NVIDIA flexing its AI muscles to become the world's most valuable company, Apple hitting a snag with its Vision Pro but promising big things with Apple Intelligence, Spotify jamming to a 64.9% stock gain, and Google backing a revolutionary new AI in healthcare. Plus, we'll touch on some new features coming to YouTube that could change how you watch videos. Let's dive into these tech titans and see what's shaking up the NASDAQ today. Oh boy, do we have a tech behemoth story for you today. NVIDIA is flexing its silicon muscles and making headlines like never before. Imagine boosting your street cred from decent to legendary within just a few years. That's NVIDIA for you. So let's break down all the buzz around this tech titan. First off, NVIDIA is officially the world's most valuable company, taking the crown from Microsoft. This isn't just a casual milestone, it's like winning the World Cup of tech. As of the latest trading session, NVIDIA's market cap hit $3.335 trillion, surpassing Microsoft and Apple. Just think about it, a company that was mainly known for gaming GPUs now ranks supreme in the global tech ecosystem. Jensen Huang, NVIDIA's CEO, is probably somewhere right now channeling his inner Rock Balboa yelling, "Yo Adrian, we did it!" And the reason for this meteoric rise? None other than artificial intelligence. NVIDIA's GPUs are the crown jewels powering everything from data centers to the futuristic AI you hear so much about, like OpenAI's ChatGPT. In fact, NVIDIA reportedly controls 94% of the AI chip market. Talk about a monopoly with a capital M. Their Q1 fiscal 2025 results were jaw-dropping too. Revenue soared 262% year over year, rounding out at a cool $26 billion. No biggie, right? Wrong, this is nothing short of spectacular. The company's earnings surged by 461%, landing at 6.12 per share, sweeping away even the most optimistic forecasts. To keep this rocket ride going, NVIDIA's strategy includes some savvy acquisitions. Just this week, they acquired Shoreline.io, a software startup that specializes in automated issue resolution in computer systems, for $100 million. It's all part of a grand plan to diversify their revenue streams and depend less on giants like Amazon and Microsoft. Shoreline's automation tech will fit right into NVIDIA's larger ambition of making AI more accessible. But hold on, there's more. NVIDIA is also launching its next-gen Blackwell Ultra AI chips later this year. These chips are pretty much the Ferraris of the data center world. The hype is real. Customers are lining up, wallets at the ready, eager to leverage these powerhouse processors. The AI boom shows no signs of slowing down, and NVIDIA is in pole position to keep leading the charge. Yet, it's not all sunshine and rainbows. The Department of Justice is reportedly eyeing NVIDIA for potential antitrust violations. But let's face it, when you're at the top, everyone wants a piece of you. So there you have it. NVIDIA is not just riding the AI wave, it's creating the tsunami. Whether you're a gamer, a tech geek, or someone who just loves watching corporate giants duke it out, NVIDIA's story is one for the ages. Keep your eyes peeled. This is a narrative that's far from over. What's up, tech enthusiasts? Let's dive into the Apple orchard to see why the tech titan is making waves today. Oh, and trust me, it's juicier than a freshly bitten Granny Smith. First up, Apple's Vision Pro, the highly awaited mixed reality headset, is already hitting a snag. According to top Apple analyst Ming-Chi Kuo, many users are quickly giving up on the Vision Pro after just a few tries. Yep, you heard that right. And no, it's not because everyone suddenly decided reality is overrated. Kuo suggests that merely offering a cheaper, downgraded version won't solve the problem. The core issue seems to be that the initial user experience isn't compelling enough to keep people hooked. Apple Insider reported that Kuo noticed users are not consistently engaging with the Vision Pro, casting a shadow over its long-term viability. So, it looks like Apple has some serious Jedi-level engineering and marketing tweaks to make before the Vision Pro wins the mixed reality wars. Next, let's shift gears to something more promising, Apple Intelligence. Now this one's a potential game changer. Fresh off the Worldwide Developers Conference, the stock jumped to new 52-week highs, thanks in no small part to this new AI platform. Dubbed Apple Intelligence, this bad boy aims to revolutionize your iPhone experience, making things so seamless, you'll forget you ever had to lift a finger to do anything. Why is this significant, you ask? Well, the durability and long lifespan of Apple products mean that fewer users feel the need to upgrade regularly. I mean, who hasn't held on to their iPhone longer than expected because it just won't quit? But with Apple Intelligence integrated directly into your iPhone, Apple's looking to trigger a new sales supercycle. This AI isn't just another ChatGPT clone. It's built to offer a highly personalized experience, tapping into your habits and preferences while staying super secure. All user data is processed locally on your device, so it's like having your cake and eating it too, security-wise. From automating tasks you didn't even know you needed help with, to making sure you never miss adding that essential item to your grocery list, Apple Intelligence is here to make your iPhone smarter, more intuitive, and let's face it, irreplaceable. Imagine your iPhone reminding you to include your favorite snack in your grocery order just before you hit pay on Apple Pay. Genius, right? However, investors, take note. The speculation around Apple Intelligence has considerably hiked Apple's forward PE ratio to a somewhat risky 32.2x. While everyone's excited, and rightly so, there's a cloud of caution floating around. If Apple Intelligence doesn't live up to its hype, the stock could face significant turbulence. Wall Street knows this, and the consensus is a bit mixed with a moderate buy rating on AAPL. So today in Apple news, we've got a headset that's lost some heads and an AI that's turning heads. The Vision Pro needs more vision, apparently, while Apple Intelligence is promising to be the brain boost your iPhone didn't know it needed. Buckle up, folks. It's going to be an interesting ride in Apple's world. Buckle up, tech enthusiasts, because Spotify is making waves yet again in the stock market. Yep, the music streaming giant is doing some serious head bobbing and fist pumping as it vastly outperforms its peers in the business services sector and even within its own niche of technology services. Let's break down why Spotify is getting all this buzz today. First off, Spotify has been strumming all the right chords with investors this year. With an astounding year-to-date gain of about 64.9%, Spotify's stock is riding high compared to the business services sector's average return of just 6.7%. That's like comparing a rock star to a one-hit wonder, my friends. And this isn't just a flash in the pan. Wall Street analysts have been showering Spotify with love. The Zacks consensus estimate for Spotify's full-year earnings has gone up by a whopping 39.5% over the past 3 months, earning the company a Zacks rank of number 1. But wait, there's more. Even when we look closer at the technology services industry, things continue to look stellar for Spotify. The sector itself, which includes 173 stocks, has had an average gain of around 20.7% this year. Spotify not only sits comfortably in this group, but far outshines the crowd. Oh, and don't overlook Paymentus Holdings, another player in the business services game, which saw an 8.2% return this year. Although not as sky-high as Spotify, it's still noteworthy, particularly when you consider its Zacks rank number 2 status. Yet the real MVP here is undeniably Spotify, dominating both its industry and sector. Now, why is Spotify such a hit with investors lately? Well, for one, the company has shown phenomenal earnings and revenue growth. For the current quarter, Spotify is expected to post earnings of $1.12 per share, a delightful 166.3% increase from the same period last year. Talk about hitting the high notes. The Zacks consensus estimate for its current fiscal year's earnings stands at $4.95 per share, marking an impressive 267.8% year-over-year growth. And if that wasn't enough to serenade investors, the forecast for the next fiscal year indicates another solid leap with an estimated $7.18 per share in earnings. Revenue-wise, Spotify's recent performance is music to our ears. The company reported $3.95 billion in the last quarter, a 21% year-over-year increase, surpassing analyst expectations. This kind of revenue growth showcases Spotify's ability to attract and retain users while capitalizing on rising subscription fees and ad revenues. Of course, it's always good to keep an eye on valuations, and according to Zacks Value Style Score, Spotify might be a bit pricey, graded at a D. Yet, its robust fundamental performance and increasing earnings estimates suggest it could still outperform the broader market in the near term. So, whether you're already grooving with Spotify or considering hopping on board, today's news makes one thing crystal clear. Spotify is playing a chart-topping tune in the stock market this year. Stay tuned, because this could be just the beginning of an epic encore. All right, tech enthusiasts, let's talk about why Google is making headlines today. Spoiler alert, it's more than just your everyday Silicon Valley shenanigans. First off, buckle up for some Reddit love. Reddit's soaring traffic has gone banoodles. Yes, that's a technical term. Thanks to a recent uplift in Google search results prioritizing helpful content, Reddit is now getting more eyes than ever. To put that into perspective, SimilarWeb reports a staggering 39% year-over-year increase in traffic for May. With nearly 1.3 billion visits from Google alone in April, Reddit is bathing in the glory of all that organic search juice. Some think Reddit's human-generated content is just too darn useful to ignore, while others believe Google search needs some fine-tuning, pushing users to sift through Reddit archives instead. What do you all think? Is Reddit a treasure trove or just a filler for Google's search algorithm hiccup? Moving on to the world of artificial intelligence. It seems Google's not just resting on its laurels of past innovations like Google Brain and DeepMind. Nope, they're betting big on Tempus AI, a hot new AI stock that just IPO'd on the NASDAQ. Founded by Eric Lefkofsky, a serial entrepreneur who also co-founded Groupon, Tempus AI is making waves by providing intelligence diagnostics to personalize treatments for patients and power up pharma research. Tempus's revenue has shot up by 183% between 2022 and 2023, and it's got Google's financial backing worth $330 million. The recent IPO saw Tempus AI's shares skyrocket by nearly 9%, pushing its market cap beyond $6 billion. Although Tempus isn't profitable yet, their unique approach and strong customer base, which includes big names from the biopharma world, indicate massive potential. What's your opinion? Is Tempus AI a risk worth taking, or a bubble waiting to bust? Finally, let's chat about YouTube and its latest experiment. In a surprising, or maybe not so surprising move, YouTube is looking to bring in its own version of Elon Musk's community notes from X. According to Jay Baxter, a senior engineer at X, YouTube is replicating the community notes feature right down to the tiniest details, like note rating options and algorithms. YouTube plans to make the platform more transparent by allowing users to annotate videos, clarifying if content is a parody or outdated footage. Musk has often hyped up community notes as the ultimate truth finder, though it's had its glitches, like falsely noting a graphic video shared by none other than Donald Trump Jr. YouTube seems keen to learn from X's missteps by restricting the pilot phase to a limited audience. Do you think YouTube's notes will make the platform better or just add more noise? All right, folks, that's the scoop. What are your thoughts on Google's multifaceted news today? Is Reddit's traffic surge here to stay? Will Tempus AI revolutionize health diagnostics? And what about YouTube's new feature? Will it enhance your viewing experience? Drop your comments below, and let's dive into this tech talk. Your insights are what make this show even more thrilling. All right, folks, let's talk stock strategy, specifically NVIDIA. Given the news today, here's what I do. Hold. Let me lay it out for you. First off, NVIDIA is already cruising at an astronomical altitude with its market cap at $3.335 trillion, surpassing both Microsoft and Apple. This isn't just some blip on the radar, it's a monumental achievement. The real kicker? NVIDIA controls a whopping 94% of the AI chip market. With the tech world's insatiable appetite for artificial intelligence, NVIDIA's GPUs are like the golden tickets to the factory. Their Q1 fiscal 2025 results are nothing short of spectacular, with revenue up 262% year over year and EPS skyrocketing by 461%. They're also making strategic acquisitions, like snapping up Shoreline.io for $100 million to diversify and strengthen their portfolio. Plus, the upcoming launch of their Blackwell Ultra AI chips is already generating serious buzz. However, while the Department of Justice is eyeing NVIDIA for potential antitrust violations, a scenario like this is becoming somewhat typical for market dominators. It's a concern, yes, but not necessarily an immediate sell signal unless news escalates significantly. In short, NVIDIA's fundamentals are strong, growth prospects are stellar, and they're continually innovating. Holding allows you to ride this wave while keeping an eye on any developments from regulatory bodies. Remember, always do your own research and consult a financial advisor to tailor any investing strategy to your individual needs. Stay savvy, tech enthusiasts. All right, tech fans, what a roller coaster of market activity today. We've got NVIDIA taking the crown as the world's most valuable company, Apple facing mixed reality hiccups but promising a game-changing AI, Spotify hitting high notes with stellar gains, and Google backing a medical AI disruptor while Reddit basks in search result glory. If you enjoyed today's breakdown, don't forget to hit that like button, subscribe, and share the video with your fellow tech enthusiasts. And hey, tune in tomorrow for another exciting roundup of all things tech. Stay curious, stay savvy.